Hey everyone, welcome to the channel. I have a really interesting topic to share with you today. If you're thinking of investing in NIO or Workhorse, it's important you watch this whole video so you can make the best decision for you. Before we get started, if you're new to the channel, I aim to help educate anyone and everyone about the stock market and give out those golden eggs that I struggled to find myself when I first started out. The stock market is an ever-changing landscape and new opportunities present themselves on the daily. To ensure you're never late to the party again, hit that subscribe button. This way you don't miss any opportunities to 10x your stock portfolio. I'd like to preface this analysis by saying I'm not a financial advisor. I'm just a hobbyist with a passion for trading and years of experience under my belt. Anything discussed today should not be considered as professional advice. Let's jump right in and take a deep dive into two of the most profitable EV stocks in the market and help you decide which stock you should buy so you can 10x those returns on your portfolio. NIO versus Workhorse. What should you look out for? Which one's the best buy for you? Listen and we'll find out. If you haven't heard of either of these, I'll quickly tell you what they're about, that way you have a little bit of an idea. NIO and Workhorse are two of the best performing stocks in 2020 so far. Both companies are participating in the EV boom, but they have very different strategies. Workhorse is building on electric delivery vehicles, while NIO is making electric cars for the Chinese market. It's no secret EV stocks have been dominating the market lately. Since the market heavily dipped in March, the CARS index has experienced a 104% gain, while the S&P 500 is just up at 59%. Two notable names in the EV sector are NIO and Workhorse. Now, since the low in March, NIO is up more than 1,000%. Meanwhile, over the same time frame, Workhorse is up more than 1,600%. The market has seen some pretty choppy price action this week, most cases only being minor losses or gains. However, these two stocks here are breaking out and gaining mass popularity. As we can see here, there are many similarities between the NIO and Workhorse. Both experienced massive gains coming into July. The NIO and Workhorse began consolidating these gains with low volume before stepping higher. Experience tells us that in bull markets like this, these sideways patterns typically lead to stocks moving up. NIO's consolidation from late August, during the prices traded between $17 to $21, leading to a 22% increase of strong volume. Workhorse's chart is similar to NIO, although the stock remains in its consolidation pattern. Given the recent trend in the market and the investors' increasing interest for stocks in the sector, there's a good chance that Workhorse sideways pattern will step up as well. StockNews.com's power rating ranks NIO as a strong buy, while the NKLA is rated as a sell. In terms of individual components, NIO has an A across the board in the trade, buy, hold grade, peer grade, and industry rank categories. Out of the 115 stocks in the China stocks group, NIO is ranked number 3. Right now you're probably thinking, great, they're booming, but why are they booming and why are they doing this simultaneously? Well, it hasn't really got anything to do with each other. NIO's big move was an upgrade from JP Morgan's to overweight from neutral. It increased the NIO's price target from $14 to $40, so that's a major jump right there. And for Workhorse, the driving factor of its growth was USPS's decision on an $8.1 billion contract for the production of 165,000 vehicles. Workhorse was set to boom again, however, it remains stagnant as the decision on the contract was delayed by a couple of months. If Workhorse does win that contract, it would likely cause share prices to skyrocket, as it would validate the company's technology and give it more resources to reinvest for growth. Alright, so let's take a behind the scenes look at how these two companies differ from each other and how that might affect your decision making when it comes to purchasing one of their stocks. Workhorse is working on producing electric delivery vehicles. It's a massive market with major potential, given the increase in number of deliveries caused by massive growth in the e-commerce market in the last 12 months. Furthermore, electric delivery vehicles will be extremely attractive to potential customers like USPS, FedEx, UPS, Amazon, all because of the huge emission cutting benefits. Furthermore, if Joe Biden wins the election and the Democrats control the Senate, it's highly likely that the cost of these vehicles will go down due to subsidies and tax credits. Workhorse is still a baby though. It's only expected to produce around 300 vehicles this year. However, this hasn't slowed investors down as they see its huge potential. NIO is much farther ahead than Workhorse. NIO's last quarterly report showed it delivered over 12,000 vehicles in Q3, which is a 154% increase over the previous year. The company is often referred to as the Tesla of China, quote unquote. So NIO put all its early efforts into developing cars for the higher end market. Doing so, it successfully established a cult following just like Tesla, with a long wait list, quickly emerging from huge demand. Like Tesla, it plans on producing cars at different price points in the later years and plans to enter the foreign markets in 2021. Now currently NIO has a much larger valuation than Workhorse, but in a market like this, traditional valuation metrics don't help determine where a stock is going, but they can help us understand the risk of the stock having a sharp decline if it fails to meet investors' expectations. NIO has created cars that people want to buy. Right now it's on a small scale, but there's already 2.5 million electric cars on the road in China. Due to lower costs, better performance and battery life, China's projected to have 70 million electric vehicles on the road by 2030. So, if NIO can have a slice of that pie, it would justify its current $36 billion valuation. Workhorse is similar in the potential and demand for electric delivery vehicles is massive. Currently it has a $2.1 billion valuation. Workhorse will be worth a lot more if it can successfully produce its product at scale with high quality and win a market share. Or its stock price will steadily decline if it can't show adequate revenue growth. So, in conclusion, both are fantastic companies. Even though Workhorse has more potential upside if it succeeds on their business plan, I still believe NIO is a safer bet at this time. NIO is already delivering vehicles, it's been well received by the public, and the company should grow at an impressive rate over the next decade. However, if you're an investor who likes a bit more risk and reward, Workhorse will be your winner. That wraps up for this video. If you stayed this long, thank you very much. It means a lot to me. Before you leave, I'd like to ask you to either hit that subscribe button or comment below what you think of these stocks and which one you think would be a better bet. If you do both, I'll like you twice as much. I hope you enjoy the rest of your day and take care. See you next time.